One thing we try and do a little different is we actually will pay for all of our founders to work with a coach, because we find it to be so valuable. Like at the end of the day, every problem is a human problem, right? And so if you can have somebody to help you think through, work through whatever it may be, and it doesn't need to be, if a founder's in a bad spot, personal life, like we will pay for them to take care of that, because it comes back to the human for us, right? Like we're investing in the human. We have to support the human, whether that's personal, professional, whatever it may be.
Welcome to the Real Estate Mindset Podcast, hosted by Eric Nelson and brought to you by Wild Oak Capital. Eric is a real estate investor, business owner, and performance coach. Throughout this series, Eric explores the mindset behind why certain investors are so successful and how we can learn from their achievements and failures. Eric asks the tough questions around the habits, discipline, mindset, and more required to achieve the most ambitious goals. Thank you for being here and enjoy the show.
Hey everybody, welcome to the Real Estate Mindset Podcast. This is your host, Eric Nelson. Today I have a co-host, Ben. He's my brother. Ben, so happy to have a co-host. Thanks, man, for being here.
I'm excited to be here, especially to talk to Cory.
Yeah, so our guest tonight, we're jazzed about this conversation. Cory Finney, thanks for being here, Cory.
Yeah, guys, appreciate you having me.
So this is cool, man, because like normally the show is multifamily based, and we recognize there's a bunch of different ways to invest, right, or place your money. So I'm excited to have a guest talk about kind of a different avenue. So Cory, I guess we'll start by saying, give us your background, man. What have you been up to? What are you doing now, and kind of what led you to that?
Yeah, sure. Grew up in Durango, Colorado, and stumbled out to California for a year and realized I missed Colorado, so came back to finish my undergrad at Boulder. And while I was at CU, I started a company, ski locker business actually, and that was kind of my foray into entrepreneurship. Ran that company for 3 years to a pretty unsuccessful exit. Learned a lot of what not to do in that one. And after that, I was fortunate to roll into an accelerator program in Boulder, working as the entrepreneur in residence for 3 years there. And I had the opportunity to teach finance fundraising to 40 some companies over a 3-year period, and really fell in love with the other side of the table, the investing side of the table, especially as it relates to startups. So got together with a couple of people. I work with my brother as well, so similar story, and started our first venture fund called Cory Capital. That fund was really a pre-seed index of Rocky Mountain region activity. Invested in about 34 companies over 3.5 years out of that. That opportunity led me to my current job. I run the Greater Colorado Venture Fund. We're a $17.5 million seed stage fund. And we're a little unique in that we invest in startups exclusively headquartered in rural Colorado.
Yeah. So Cory, I mean, we met, at an event, and then we went to lunch. And so like, for me, this is like such a cool, avenue, right? Like it's so intriguing. So I just like with the lunch, I think it took us like an hour and a half to eat a bowl of soup because I just kept firing questions at you. But I mean, the first thing is like, can you speak to like how you got into that, specifically like rural Colorado thing? I think if I remember right, it was kind of a grant that pushed you there, but like, give us the background on how you got there. And then I think maybe we'll dive into more venture capital questions.
Yeah, sure. I'll start with how I got into venture capital, because that's a question I get asked a lot, and I think parlays into the rural piece. After my company, had a hell of a time trying to raise money while I was running my company, and was like, man, I want to be on that side. Like, there's a better way to do this. There's companies out there that aren't getting funding that I think should be getting funding. And I remember sitting down post-exit with friend of mine, his dad was a VC and in Colorado, and told him, I was like, hey, I really want to get into the venture capital world. And he's like, oh, well, what school are you going to go to? And I was like, what do you mean? He's like, well, yeah, you got to go back, get your MBA, probably go work at an iBank for 4 or 5 years. And then maybe you can get in as an early level analyst role. And I think he saw my soul die a little bit. And
I think my soul would die too. Like, oh no.
Mine did, just listening to that.
I was like, man, I know I want to be in that world, but that is not a path that I'm going to be able to put myself through. And he's like, or you build a network of high net worth individuals, you show them that you're trustworthy, get them to trust in you, and then eventually invest in you, and you start your own fund. I was like, that sounds hard, but that sounds more like a path that I'm willing to go. So that was kind of how my mindset shifted towards thinking about getting into the world of venture capital, was how do I build this network, and how do I start learning and absorbing just all things startup investing, startup building. I coupled that with, man, I really want to get back to the mountains. So at the time I was living in Denver, working in Boulder, and I've always had the goal of being able to do startups. Well, I guess since this time period, being able to do startups from the mountains. So we started kind of touring around the state and just getting to know entrepreneurs across the state, and realizing that there's a ton of opportunity outside of the metro environments. And that's kind of where my heart lied as well. Couple that with, you look at Colorado, and I think we're a really unique state, and the fact that, I'd argue the true wealth in the state is in the mountain communities. It's not actually in the metro environments, which is very different than a lot of states. And so my thought was, okay, we have all these untapped resources that aren't investing into their community of Colorado. And a lot of them may be part-time here. They may not spend the full year here, but they want to be local. They want to have a piece of, the brewery or the coffee shop or the clothing company that's in their backyard. How do we get those folks engaged around capital being kind of the moth trap, if you will? So we did venture one-on-one seminars across the state, and I started to see a path of, okay, I can do entrepreneurship. I can maybe do venture capital from the mountains. And then it was just a strike of lightning, like right time, right place. The state of Colorado put out an RFP, request for proposal. They were looking for a fund manager to manage a fund that would invest exclusively in companies in rural Colorado. A whole bunch of dominoes fell in place at the right time. Put a team together, put a proposal together, ended up winning the competitive process, and the state of Colorado actually seeded our fund.
Yeah, I mean, that's such a cool story. So, I mean, I grew up around here as well. Ben and I both have a love for skiing, for outdoors. I mean, this is kind of like, it's super cool that you could make your kind of double dream happen, right? Like the mountain thing and the venture capital thing. So I guess I'll ask the hard question is like, how's it going? How is the rural Colorado business investing going? I mean, again, tough question, but if you don't mind, be honest.
So I'll give the caveat that the world of venture has perhaps the slowest feedback cycles of any professional industry out there, right? We're patient capital. We're putting money in, and it's 5 to 10 years before we see an exit on average, right? Average time to exit post seed round is about 7 years in our industry. So a lot of our success is going to be on paper, if you will, right? That said, things are going well. We've made 25 investments. We've had 5 acquisitions out of the fund. We're only 3.5 years into it. On paper and in terms of returns, we're top quartile from our vintage. So I think we're feeling really optimistic. We've found some incredible opportunities of companies we're still in. And, I'd say if anything, COVID was a positive from a community standpoint for us. There's a lot of people and companies that moved into our market and out of metro markets during COVID. And so that's led to more opportunities now that we're seeing. So I'm cautiously optimistic, but feeling like we're in a pretty good place and feeling excited about kind of the future of innovation outside of these metro markets.
Right on. So I guess, let's get a little bit more specific. So let's say you are a startup in Durango and you need some cash, and how do they approach you? What does the underwriting process look like for you guys? I mean, do you have a team to do that? And then, we'll get into some maybe investor questions after that, but let's start with that. Like, if you're a company, you're like, hey, Cory, I heard you do this stuff. How can you help me? What's the scoop?
Yeah, we try and make ourselves as present as possible in the community. The first year and a half of the fund was pre-COVID, and we all bought vans and traveled around the state. And there's three partners: myself, my brother, and then we have one other partner named Mark. Um, and For the first year and a half, I think collectively between the three of us, we spent like over 450 nights in different communities on the road, building those relationships and trying to build our brand, right? Like that's really the only chip we get a barter on in the venture world is the brand that we're working with.
So was it let's just ask the question, was it cab over camper or was it a sprinter or what?
We all went different rounds. Yeah, we all went different rounds. I got a ProMaster, Mark has a sprinter, and my brother has a cab over hybrid, if you will.
Nice. All right. I figured
the important questions.
Yeah.
The important questions. Yeah, totally.
All right, anyway, sorry to cut you off.
Yeah, no worries. So I think we're fortunate to build relationships in the communities that we work in. Those folks generally are making warm introductions. So you're in Durango, you're in Salida, you get connected with SBDC, Economic Development Director. They hear you need capital, they're going to send you our way. We try and be as present as possible and have as much of a presence as possible. We don't make it a mystery to find us. Our email is readily accessible. partners@greatercolorado.vc. Anybody can reach out. Once you engage with us, we try and run a pretty tight process. Like we've all been entrepreneurs and we all recognize that fundraising sucks. At least in my opinion, right? And
yeah, of course it does. Plus the timeline sucks. Yeah. So it's awesome you guys do.
Yeah. Yeah, we don't want to make it suck more than it needs to. And so we'll engage and we'll get you a really quick no if it's not a fit for us. Typically it's not a fit for two reasons. One, it's scale, right? We're playing a weird kind of distribution game that we can get into, power law distribution game. And then two is stage. It's just a little bit early. Right. So most companies we're working with, if a company goes through a life cycle of crawling, walking, running, we're coming in as it's kind of taking its first steps, getting it to the running phase. That's where we really specialize. So a lot of times we have entrepreneurs who are like, hey, I need to $200,000 to get my business off the ground. We're like, that capital is not our capital. Here's other places where you can look for that. If we want to dig in, we do a partner call with all three of us. From there, we decide if it's worth going into deep diligence or not. If we go into deep diligence, we collect all the documents, right? Play lawyer for a little bit and go through operating agreements, vesting agreements, that kind of stuff. And then we try and get a decision within a 30-day window to companies. And then, from there, it's just the three of us doing all the work on each investment, unanimous decision on every investment.
Yeah, that's super interesting. I mean, it sounds similar to how we operate, right? And I think it's really interesting, especially coming from all of us and coming from rural communities and seeing the benefit of helping that. And really, to your point, the transition of just the world in general, like post-COVID, or even like I would say pseudo during COVID. So it's the same for us. And I think Eric and I, we have a mantra within Wild Oak, it's people first, and kind of figuring out how you build these communities, because it's a very similar idea and a very similar mentality. And so it's really cool to talk with you and hear kind of how you're putting your spin on that. So if you wouldn't mind, just a little bit more, like what kind of companies, are there specific types of companies that you're looking to do? Is there something that gives back? Is there a way that, what are your criteria? And you said a little bit about distribution, but how do you go about, or is it, is it really spread out? Who do you invest in and why, if you wouldn't mind sharing that?
Yeah, of course. So growth companies, and we kind of define growth as a business that's headquartered locally, but able to sell its product wherever, right? Some examples of that in Durango, there's a company called Agile Aerospace, and they're developing the 3D printing propulsion units that literally are going to be the next propulsion units for the lunar lander mission. So taking us to the moon. That's a fun startup pun I got to throw in there whenever I can. In Telluride, we got a company called Western Rise. They make men's performance apparel, right? Selling their pants on 6 different continents around the world.
I own some of their pants. Good job.
Yeah, they're the best. They're the best. Check them out. We had an e-bike company that was acquired out of Eagle, making e-bikes for the outdoor, like hunter fisher industry, called Quiet Cat. We have a distillery in Marble, so it's really diverse if you look at our portfolio, from software to products to everything in between. But the common thread is high growth ambitions, right? So looking at, when we're coming in, typically companies are doing a couple $100,000 in trailing 12 months. Our goal is to get them within the next 24 months to a couple $1 million in trailing 12 months at least, which just helps set them up for kind of next round of financing or potential acquisition paths.
And then let's say that, let's say they get there, right? So you're the parent company, let's say, and you guys come in, give them some seed money. I'm sure there's some oversight. Like how much are you kind of, I think we talked about this a little bit as well. Like, do you take a seat on every board? How much involvement do you have?
It varies. So we have kind of our standard menu, which all companies go through, and that's every 4 to 6 investments. We get them together in the middle of nowhere, somewhere in Colorado, and put them through like a mini accelerator 3-day program, and we'll bring in mentors and speakers for those sessions, and that establishes a common language amongst us, so that when we come back and we're like, hey, what are your OKRs this quarter, or how the KPI is going, we're all talking the same thing, and we have that framework, the operating framework to build around. So everybody gets that treatment. In addition, we set up a Slack channel with every company, free conversation back and forth, kind of as they want to engage. We have at least a monthly check-in, I'd say, with companies. And then above that, some companies we do end up taking board seats. I think we have 7 board seats, I want to say. Not full, some are observers, so different capacities there. And then, it's really founder driven. Like, we don't need to babysit. Our bet is that we are putting money behind really amazing humans who are fully capable of building the business way better than we ever would be able to. Right. And probably similar to what you guys do. It's like there's people operating these projects and that's their job. So you have to let them do the job to some extent, but we're there to support in whatever capacity we can. And, if companies going through an M&A transaction or has to do a round of layoffs, it can be on either side of the spectrum. Like, we may be chatting with the CEO every day, every other day type thing. So it really just varies on what's going on in the companies.
This is incredible because it's kind of similar for us, right? Like we rely so heavily on a property manager, and if they're the pros, that's their thing, right? And they probably have more passion around that than we do. Otherwise we'd be doing that or, something else. And so it's cool. I really love what you said is like, you guys are investing in people because at the end of the day, that's really what it is. So
that's the only variable we have control over. Right? It's a crapshoot after that. Like, global pandemic hits, and like, who knows how these things shake out.
It's also super interesting too, because on a level, it's very similar because you're the people too, right? Like you said, going out and building these networks of people. These people are trusting you to be the people also, and it's similar to us. Like when we have these conversations about putting together projects and finding people to invest. It is about them trusting us, and it's very much about those people trusting you. So I think it's really similar to the parallels. And if you don't mind, I'd kind of like to take a step back. One thing you mentioned was building a network of these high net worth individuals. So driving your vans, like, you throw dinner parties with, Pyrex with your high net worth individuals in the mountains. I'm psyched to find out if that works. But how did you build the community of people that are actually investing with you or, as a part of these funds? Because it is, right. It's a challenge to be able to talk that language and to be able to speak, intelligently and fluently and build trust of these local communities, and also be able to function in a high net worth environment and be genuine and be real about that. So I'd love to hear how you kind of started building that.
Sure. It started that really just being in the front range and like showing up to everything. Like, as a young entrepreneur, like, had to build my own brand, had to get my name out there, right? And showed up enough that I think people were like, hey, he's willing to raise his hand, do work with no expectation of anything in return. There's a mantra in the startup world, especially in Colorado, comes down from Techstars, called give first. And it's just expectation that you put energy into the system, it's going to come back to you eventually somehow, right? And so that's really where it started, was like, let's just volunteer. Let's start TEDx to bring people together. Let's do this. Let's do that. Like, let's host investor meetups, different types of things. And that just started to build credibility and trust. And I think people saw that, like, we weren't in it. We were in it for the right reasons and not necessarily just to make money. Like, that's a byproduct, hopefully, but we showed up because it was a place we wanted to be and a thing we wanted to be doing. And I think that we've taken that same approach in transitioning that high net worth network building world to like the rural communities, right? We show up, we're there to, first and foremost, like educate. When I'm talking to a founder or a potential investor in rural communities, it's often a very different conversation than if I'm showing up in Boulder having that same right dialogue. Guilty until proven innocent is a thing that you all maybe resonate with a little bit, right? It's you got to show up and just expect that you're the bad guy, right? And own it and like be comfortable with it and let them get comfortable with you, but like don't force that. I think that that's incredibly important in our world. And then, I come back to too, like a lot of it was timing in place. Having the state of Colorado say, hey, we're going to support this group of individuals. And then we had a couple other really well-respected people from the Colorado entrepreneurial world who were willing to say, yeah, we're going to stand behind them. It lent us a level of credibility that I mean, so lucky is the only way I can put it. Like it really opened a ton of doors early on. We were able to get in, have the conversations and just be genuine and authentic with folks, right? Like I think especially my experiences with founders and with high net worth individuals, like their bullshit meters are really good. And if you come in and you're just spewing, they're going to call you on it and you don't get a second chance. Right. And so like being authentic from the get-go and saying, hey, I don't have an answer to that, or that's one of the hypotheses we're going to be testing. We'll let you know how it goes. Just being genuine around that, I found to be the best strategy, the only strategy. Pretending like I know everything, like I don't know that much. Pretending like I know a bunch coming into a room has never worked for me. So
yeah. So the most powerful words anybody ever can say is, I don't know the answer to that question, but I'll find out. Like we live behind that. I personally live behind that. So, I mean, and it's basically not how you build your teams too, right? Like you can't be all things to all people all the time. So that's why the magic and the power of teams is so important. And I kind of wanted to get into that too, is like, we are really fortunate that we have a pretty awesome overlap of skill sets, and that's what makes a team function. So how do you function with your team? And do you see like how do your individual skill sets and how do you guys operate? I'm just curious about like how this world works for you guys too.
So it's funny because there's three of us, right? And I think we're helping entrepreneurs build teams, which is more hierarchical, like delegation oriented, but like we're building a partnership. And I think partnerships and teams operate very differently. And we're fortunate, I'm sure you two are probably similar. My brother and I are very similar, but very different at the same time, a little bit of yin and yang, right? So we have some natural, complementary overlap, but also complementary skills. And then Mark just like gels into that picture incredibly well with us, right? So like Mark can get people rallied around a thing like nobody I've ever seen. He can build community better than any person I've ever met. His background was building startup communities all across the world. That was his last company. My brother is incredibly analytical. Like he will get into the details. He will ask the hard questions and he will ask like the principled first questions. And then I think I kind of find myself somewhere in the middle of just being more of like an operator, the balance guy, if you will. And so that dynamic has been really helpful for the three of us in figuring out our own partnership. But it's like any partnership, right? Whether that's with a spouse or whatever, like it's hard.
Yeah.
Really hard questions.
Yeah. Some days are awesome.
Yeah.
All the days are awesome. They're listening. Be cool. No, I think it's really interesting to hear you say it that way, and really kind of how you build your team and looking toward the future, and how it seems like you have a really great baseline, and you guys have developed some systems to ask those questions and to kind of figure out where people are. Like you talked about, you're mentioning where it's this kind of crawl to walk to run. And the stage you come in is, I don't know if you have kids, but there's a thing about toddlers where they're just so top heavy. They just kind of lean forward and gain enough momentum to actually move forward. And I feel like that's kind of where your sweet spot is. But knowing that, like, what does the future look like? And what do you look like for your team to grow? And how do you help? And in your growth, how does that help other people to grow? Like what does the near future look like for you guys, and where do you want to go in the long term?
Yeah, I mean, that's a continually evolving conversation, I would say, right? Like we eat our own dog food. You guys mentioned you're doing a team retreat before we hopped on here. Like we're doing a team retreat, or we do team retreats with the three of us to talk about this thing exactly once a quarter at least. And we come out of those with somewhat of a different idea of what we want to be when we grow up each time. But I think, like, we feel very fortunate to be what we're doing, to do what we're doing in the market we're doing it in. So we want to continue that. I think we like operating as a lean, nimble team. So I don't see us trying to staff up a ton. Like, I think that there's a ton of value and frankly, like, my job's not hard. Building a company is hard. My job's not that hard. So, like, I don't see a need immediately until we hit scale within our own efforts to start really needing to staff too broadly. That could change, but for the time being, like, I think we want to focus on just, we finally are at the place where we know how to do what we do.
Yep.
So it's getting into our own, right? Like, we're done being a toddler ourselves a little bit, is what it feels like. We're done leaning forward and have some of that momentum and are kind of walking on our own. And I think we need to take a few more steps before we figure out what running is. The one thing I will say is, one thing that kind of unites us is we're all really passionate about, like, capital innovation and doing things different and just pushing the boundaries of venture and the boundaries of startup investing. So a common thread we're going to have is trying new financial instruments, seeing if, we can't get creative on how we invest. That'll be a common thread.
Man, it's so cool because there are so many similarities between what you're doing and what we're doing. I mean, you mentioned education. I mean, that's the reason for the podcast, right? Like, or like, I love what you're doing. I love what you're saying. I love, like, you guys have these companies come together, and get educated. You have good speakers, right? So you're kind of giving tools. It's so similar. Like, our investors, we want them to be educated. We want them to understand what they're doing, what this means, all that stuff. So that's a really kind of good transition point, is like, let's say you want to invest with you. So do you have a little bit of cash and you say, I would love to try this venture capital thing. What does it look like an investor? So walk us through, if you're a high net worth person or just anyone who has some extra cash, how do they invest with you? And then, I assume that's pretty darn locked up for until the full exit type thing, but what does it look like as an investor?
Yeah, sure. Give the caveat, this isn't financial advice. I'm not a lawyer, but
nice, Cory.
Thank you. Yeah. So our investors are getting into a long-term relationship with us, right? They're called limited partners for a reason. They are partners. They pool their capital into a vehicle. That vehicle contracts the general partner, which is Jamie, Mark, and myself, to manage that fund. That fund is going to invest in 25 to 35 companies over the life of it. About roughly 60% will go into initial investments, 40% into follow-on as companies grow. And then those investors will recognize returns upon liquidity events within the portfolio. So they're patient capital with us, kind of typical top quartile return metrics that venture capital funds shoot for is 3x. And
over a 10-year period, more or less.
Yeah, it's a 10-year vehicle that we have. Usually there's options to extend it on the back end, right? Like, if you're 11 years into Uber, you're not going to call your position. You're probably going to hold on 2 more years for the IPO. So there's some flexibility, but 10 years is kind of the general expectation.
Yeah, I mean, there's so many similarities here, right? So same in our world, limited partners, general partners. I think it's slightly different, but it's a very similar situation. So super cool, man. So I think we could go on for a long time, but I think we're going to transition now at this point to, like, some mindset stuff. And then we can probably circle back to some of the stuff we talked about. So Ben and I will just kind of fire some questions at you. Then we'll spitball from there, of course. But first question I always ask is, do you have a morning routine?
Yeah, fair. I didn't up until about 2 years ago, and I do now. So get up, make breakfast, have breakfast with my partner, and then after that, it's usually straight into the computer, kind of just see what the day's about to bring, prioritize a little bit, and then depending on my meeting schedule, I'll either get into work and work from home and then go into the office, a little bit later, or if I have a bunch of meetings and I'm in the office pretty early. And early is relative in my world. Early is like 9.
You live in Durango, man. That's yeah. Like crack it on. So yeah,
I'm up at 7 and in the office around 9 usually. unless I get into deep work, then I work at home until 11 or so, go into the office. I like to take Zoom calls from there. And then, yeah, it's kind of day in, day out.
Right. Yeah, kind of piggyback that. So especially I find in our worlds and people kind of looking to grow, a lot of people have some favorite books or some things that they've read that have propelled them or have really influenced them in certain ways. Is there anything that comes to mind as far as what you'd like to share or what kind of influenced you?
God, too many. Yeah, high level, like a couple startup communities. Book by Brad Feld has just been an amazing framework for thinking about growing startup communities. We're fortunate to know Brad and to have his mentorship around that as we kind of try and bring that to the state. Extreme Ownership by Jocko Willink, one of my favorite books. I think just you talk about mindset, like that's such a great mindset book. That's a book that I like giving to all of our founders. Anything by Ryan Holiday is end of, right? The Obstacles, the Way is probably my favorite by him. And then one book we actually buy all of our founders, this is kind of fun, is it's called Cowboy Ethics. And I think there's an extended title, Cowboy Ethics. I can't remember.
Can you say it out loud? Can you put it on?
It's I have a copy.
Growing up how we did, I'm familiar with Cowboy Ethics. I'm not sure the full title is.
It's like How Wall Street Lost Its Way or something like that. But it's kind of fun. Just general, like here's what the Cowboy West was and what it means, and you ride for the brand, you don't ride for yourself. Like some of those guiding principles that we're all familiar with having grown up in the West.
That's pretty. Honestly, we've heard a lot of that. I've never heard that book said before. Cowboy Ethics. I'm psyched to read that one.
Yeah, no, that's awesome. And actually, I like. I'm on the board of the Boys and Girls Club here in town, and that's like one of the things that they teach. Actually, like they talk about cowboy ethics, and it's interesting because sometimes people are like, what is that? It's always like the first time you tell someone, they always get this like, what? And it's kind of fun because then you get to describe and like, well, here's what it means, at least in this particular realm. But yeah, I mean, that's such a cool book, man. I love the concept of giving books. So and we need to write that down for sure. Like probably all of our investors deserve some book.
I'll get you a copy, Eric. Next time I see you, I don't know if I'll see you next Tuesday, but yeah, I'll bring one for you.
Yeah, Ben's you're not local.
It's a quick read.
Sorry.
By the time you see him, you'll be done with it.
I'll get the hand-me-down version. That's all right. It's cool.
Sounds good. Cool, man. So this actually transitions well because you mentioned like a mentor, right? So I always ask the question, have you had a coach or a mentor? And then, piggyback on that too, would be like, if you had to pay for it, was it worth the money?
Sure. Yes, in a bunch of different regards. I've had some amazing mentors that have become really good friends, right? Former professors, teachers, people that I still keep in contact with, take time to travel and see them. They take time to travel and see me too. That's been, I can't like put words to the value that I've gotten from the mentors in my life. I think as I've gone through my career, it's gotten to be a little bit more focused. And so I have different people I lean on for different things. I have, we have a board of advisors for the fund, and like these people have way too much experience to be chatting with us, but for some reason they pick up the Slack or the text or the phone call whenever we call, and they really are amazing at guiding us. And then as far as like professional mentors that I've paid for or coaches that I've paid for, I have therapists I talk to every other week that acts as my therapist / coach / cheerleader / mirror / whatever I need kind of in the time. And yeah, absolutely. Like I view them as a coach and a thought partner. And I think, one of the better investments I've ever made in myself for sure.
Yeah. It's funny. So like, Ben and I share the same coach, like, because I think it was partially because I spoke so highly of him, that Ben's like, dude, this guy sounds awesome. But I kind of lucked into him. It's one of those kind of luck things, right? He was local here. He's since moved to Santa Fe, but similar story where like, I can't put the value that I've obtained. And it's so funny because you said it in words, like it depends on the session. Like sometimes just a mirror, I'm like, saying the stuff. And I'm like, oh man, you're so annoying for saying that. And he hasn't even said anything.
Yeah.
But the point is, like, the reason I ask is because I find a lot of value as well. And I think I like to get the word out about it. Just about every show, I kind of semi-preach coaching. So
that's one thing we try and do a little different is we actually will pay for all of our founders to work with a coach, because we find it to be so valuable. Like, at the end of the day, every problem is a human problem, right? And so if you can have somebody to help you think through, work through whatever it may be, and it doesn't need to be, if a founder's in a bad spot, personal life, like, we will pay for them to take care of that, because the human, it comes back to the human for us, right? Like, we're investing in the human. We have to support the human, whether that's personal, professional, whatever it may be.
Wow, that's so interesting and really powerful and true. I mean, that's every problem is a human problem. I've heard that several times, but in this realm, and honestly, not necessarily in the investing realm, but to have it brought back to that is super true. And it's really interesting, like the ability to see it as the community. And you said that a bunch of times. And I think that's why it rings true for me. And I imagine for Eric too, is that the community itself is built up of individuals. And if you build these things up and you build these people up, it's pretty incredible what can happen.
Well, like, selfishly, like, founders aren't going to be building the best business they can build if they aren't in a good place and they're not taking care of themselves and their mind's not in a great place, right? Like, they can't perform optimally in the same way that an athlete has coaches and an athlete has trainers. Like, they need to be able to perform optimally, and helping them take care of that would be fun to be important.
Yeah, I think that's the analogy I hear the most often is like the athlete thing. Like, Michael Jordan had several coaches, even at his peak. And part of the reason he was there was because of that, right? And just because you're good at something, maybe you're really good at running a business, you could always get better, or learn something so it doesn't necessarily I love what you said. Like, if you're not in a good spot, you're going to do poorly. But even if you are in a good spot, even if you're killing it, a coach is still valuable.
Well, and to your point too, like Michael Jackson had basketball coaches, but he also had performance coaches. So he's amazing at basketball, but also sorting that stuff out between his ears is part of the battle for sure.
You said Michael Jackson, but that's okay.
Probably Sue. Actually,
Michael Jackson probably was good at basketball too.
It came out, and we'll tell the story later, but we had our Grammy gave us a basketball one time and she autographed it Michael Jackson. And that, honestly, I told that story today.
I know why Ben said that, dude.
I told that story today. I'm not joking. On Christmas one time, I think it was Eric, was a recipient of a basketball autographed by Michael Jackson in our granny's handwriting. And so you're right. Both Michael Jackson and Michael Jordan, but yeah.
Oh, it's so funny. It's such a good story, too.
I think to kind of move this into it. So, and dealing with coaches and dealing with, because Eric mentioned we have the same coach, and I actually had a session with him this morning, and there are those times when they just stare at you, right? And like, you know the answer. But I think it also helps realize that not necessarily the missteps, but asking questions that are hard. And the times in my career, be it here or otherwise, that I've stumbled, was because I just wasn't listening or paying attention. Hubris can come in there. So I think a good question we'd love to ask is, can you share an example of a mistake or a misstep or, a learning experience that you've had, to share so people can kind of learn from that as well?
Sure. This might be a little bit deeper than you're looking for, but I think this is part of why this matters so much to me. Is like, when I was a founder, sold my company, had a relationship blow up the same week, and realized that I had no identity, right? And I built this business, I'd ran this business, everything had gone into the business, and I'd forgotten to actually take care of myself and build myself while I was doing that. And I think that that's something that we see so often. It's like, yeah, you may be crushing it in the business, but are you crushing it as a holistic human being, right? And how are the other places, and what are you hiding from? Are you actually paying attention to your entire life and balance across your life? Or are you just kind of outletting to work, and that's why you're crushing work because the rest is kind of a mess, right? And so that was my own personal example. Is I had to go through a pretty deep depression, pretty kind of hard period of just being shit, who am I? What do I want to do? And I hindsight, best experience I've ever had. It gave me time to think and prioritize. Hey, I want to do entrepreneurship and VC from the mountains. How cool would that be? So it gave me space to come up with that, but it had to come from a pretty uncomfortable place, in a pretty raw place.
Yeah, man. Thanks for being vulnerable. No, we love deep, right? So the more raw and authentic you can be, is like, this resonates with people. Because for me, myself, I mean, like, gives me chills, because I think it's so important. What you said is like, dude, there's so many parts to this life, right? And you can try and maybe categorize them, and that's a good way to do it. But you got to be conscious of all of them. You know, your relationships, your friendships, your spirituality, your, like, you know, your work-life balance, your, you know, your hobbies, all those things. It's like, just what you said, you might even be hiding from something, and that's why you're crushing it. So it's super, super valuable what you said. So thanks.
Yeah, there's only so much spackle you can cover a giant hole up before it just implodes, man. Like, it's the truth.
No doubt. Right on. Well, thanks again, Cory. The last, well, we have a couple more. One is, what's a mindset tip that you can share with our listeners?
Yeah, this is something that, you know, I think we all find in our lives, but like, find really often people can oscillate or land in one camp or another, kind of between like victimhood and ownership. And I come back to that like extreme ownership mindset, right? And I think just taking the time to point the finger inwards and figure out, hey, what is my role in this situation, good or bad? Like, what do I own and what do I have control over? And not pointing the finger outwards and saying it's that person's fault, or it's that existential, like, you know, it's the pandemic's fault. Like, that's just going to happen. But like, the most successful founders we work with just figure out how to find the silver lining in it and own it, and, you know, make the most out of kind of what they're handed. So I think the more that you can live in that mindset, easier said than done, of course, but the better.
Yeah. That actually ties into sort of the next question. It's a two-parter that we ask everybody. So what, and I'm excited to hear what you have to say, but what's your definition of success? And then if somebody asks what makes you successful, and especially working with the companies and the people that you do, I think we all recognize that there's different levels, but what do you think is, what do you define success as? And if they think you're successful, why do you think that is?
Sure. So I think I've always taken a really long-term view to success. And I think it's continually evolving, because like, complacency kills. And so I've had times where I'm like, man, I feel successful. I'm doing my dream job from my dream location. What else could I want? Like, but I'm too young to like tap out. Right. So like, success has to be redefined a little bit. I think long-term, like, success to me, and I've been incredibly fortunate in my life, but it's just being able to open doors for my family that, you know, and again, have been incredibly fortunate, but I want to be able to open doors that weren't necessarily open for me. That's how I define personal success long-term. You know, would people say I'm successful? I don't know. I don't necessarily feel it on a day-to-day basis. I feel incredibly lucky, and I feel like I'm doing a good job and showing up and doing my job. But, you know, I haven't returned a fund yet. I haven't made people money. Right. And so like, on a short-term basis for my profession, that's what success is are you taking money and turning it into more money for other folks? And are you making good decisions on other people's behalf because they have trusted me with their capital? So I think, you know, that's how I define success on a short-term basis personally in my professional world. So I can't say I'm successful yet, because I haven't yet crossed that threshold of like, return the total fund. Now we're into the bonus points.
Right. No, I mean, I get this, like, a couple of things resonate, or just kind of similar stories, right? So we have our first couple of deals, same exact thing. Like, people are trusting us with their capital. We will absolutely do our very best to make sure that we can do all that we can to create more money, just like you said. But we probably align in that way where it's like, is Wild Oak successful? Not yet. We're definitely working towards that. And to have properties, I mean, that is a measure of success as well. I mean, like you have a fund. I mean, that's incredible. So absolutely don't sell yourself short. But anyway, go ahead.
The other piece, the last piece is like, and I've hammered it way too much, but like, am I proud of every person that I've supported? Right. Like, and I can say yes to that. So successfully have been really proud of the people that we've supported. And I think that that's incredibly important as well. Yeah,
I think, you know, I'm going to actually jump back a little bit here too, because I really wanted to touch back on what you said about like extreme ownership, because I and Ben and I myself have had conversations about this. Like, if you can take ownership, it is, like you said, it's hard, man. There's some days where you're just like, that sucked, or that person did that thing, but you played a role in it probably, you know, and it may be 5% of the time it's not your fault. Usually it's like your fault, right? Or maybe not your fault, but what can you do? Or how can you see the silver lining? Or how, because there's no reason to be the victim, because it just will crush you personally. And it's, so we subscribe to that for sure. I know I do. I don't want to speak for Ben, but I had a guest.
No, I like to blame you.
My bad.
It's the brother. I got one too. Yeah.
No, I mean, that's really true. Yeah, it is. And I think that book, I'm a huge fan of that book as well, by the way. And also the Dichotomy of Leadership. There's a follow-up book to that, which I found a ton of value in also. But asking questions and really, to your point, like pointing the finger out. I say, I've got two little boys. Like I actually said it yesterday. It's like you point one out, you got the three back to you, like the classic grandpa. But truly, if people aren't performing and people in your life or people that you rely on, you know, this person's falling down or this person's not getting this job done. But also, did I give them all the tools to do that job? How much is that is on me to make sure that that person can do that job to the best of their ability, or even just support, you know, like I think, and again, it comes back to so much of the things that you've said here and building this community. At the end of the day, it's building people up. It's allowing the space for and the tool and providing the tools for people to realize what they can do. And a lot of times when we talk to investors, we talk to people that are also in this space, whether it be in single family, multifamily, or anywhere along this journey. The one thing that I always hear is that people, it just takes doing, like getting started, right? So, I mean, I commend you, and I know dealing with, you know, rural folks and getting into this, and there's some really ambitious, incredible people, but it's also, you know, being able to help them realize that that the world is a big place, but rural is amazing, and having the fortitude and the ability to step out. There's a lot of people that'll tell you no too. There's a lot of people who try to drag you down. So actually having the ability to help some of these people is pretty amazing. So congrats. I really want to learn more about what you're doing, man.
Thanks. Appreciate it. Yeah, no, we feel incredibly lucky. We get to spend our time with some pretty amazing people.
Cory, well, this show has been incredible, dude. I think we could probably, I probably will hang on and make you talk with us longer until you hit the end button. But no, I mean, the final question I always ask is where can people find you? You kind of gave your email, but where can people reach out? You know, can you pitch your website, that type of thing?
Yeah, sure. Easy to find on LinkedIn, Cory Finney. Email Cory at Cory at greatercolorado.bc. Website is greatercolorado.bc.
Well, thanks again, Ben, for being here. Thanks, Cory, for your time. Appreciate it.
Appreciate it, guys. Thanks for having me.
Thank you for listening to this episode of the Real Estate Mindset Podcast. If you've enjoyed the content today, please follow this show wherever you listen to podcasts. And don't forget to head over to wildoakcapital.com for more information or to connect with Eric directly. Please take a moment to leave a review or tell a friend about what you've listened to today. We hope you'll tune in again soon.